You don't think this is over?
Yeah, I think it's still a little premature to call the bottom in here. To me, this is starting to morph into a global growth scare. I think it started out as something very different, but I think we're in global growth scare territory now. I'm looking at 2015, 2016, and I think it tells you there's another leg down. We lost about 14% in that correction.
15, 16, the playbook for you at the moment then?
Yeah, and if you actually just look, sometimes we just need to stop and listen to the market. And if you actually look at how sectors have been trading relative to the broad market since mid-September when we peaked, it looks pretty much like that 2015, 2016 playbook.
Peter?
Well, it's interesting. I fundamentally agree with you. So I'm strategically bearish. I think the difference is we've been concerned about rates volatility and peak earnings since the beginning of the year. And so I've been somewhat more bearish than my peers to begin with. Our target for the S&P starting the year was initially 28.65, and we lowered that in April after the bounce to 28.05. And many of the things that you're pointing to were exactly the reasons for that. The global growth slowdown is here. We've been talking, with John in particular, we've been talking about the slowdown in emerging markets and in Europe, eventually feeding back into the United States. That said, the markets are very oversold right now. And just by that setup that we got from all the strategists speaking so bearishly about the markets, between the sentiment and also there are things about the volatility surface, which I would love to talk about later perhaps, that are telling me that we're set for a rally into the end of the year as I think funds start to chase.